Welcome to episode 42 of Full Throttle, the Presidio Group's automotive industry podcast. I'm your host, Jason Stein, Director of Multimedia and Events at Presidio. On a regular basis, Full Throttle serves as the industry's meeting point for great conversations with leaders across the automotive world.
This isn't necessarily a bad thing. I think a lot more of the financial pressure of this tariff scenario falls on the manufacturer. What are you going to build? How much are you going to build? How much are you going to send here? Who's going to eat this tariff? Are you going to pass it along? Where the dealer doesn't have that kind of or that magnitude of structural decision to make. They'll basically sell what they're given, do what they can with pricing, and try and keep both sides happy, which, as we know, will be impossible. But it's certainly not the financial burden that the manufacturers are facing.
Tariffs, tariffs, tariffs. It's not the talk of the industry, it is the industry at this point. What will the effect of the administration's decision be on the North American automakers and dealers? Where are the challenges with affordability, already a lingering issue for consumers? And could this be the exact moment when the dealer body seizes an opportunity for supply-demand advantages? Could it be the tariff pandemic that we're looking at? Today, in a pop-up episode of Full Throttle, we examine all the questions with Kevin Tynan, Presidio's Director of Research. Kevin has a theory, one that you won't want to miss, and it focuses on the lessons learned during the pandemic and applies to the units in production in America and what could happen to dealership profitability. If the question is, what's next on tariffs? The answers might surprise you. Today on Full Throttle. It's my pleasure to welcome back to the program Kevin Tynan, now a multi-time guest. What a pleasure, Kevin.
Oh, pleasure's mine, Jason.
You've coined a phrase. It's been used internally here at Presidio, but I want the world to know because I'd like you to explain it. It's a unique take on where we are with the administration, the industry, and concerning tariffs. The tariff pandemic. What do we mean? What do you mean by the tariff pandemic, Kevin?
So basically, what tariffs will do, one of the things that tariffs will do is constrict supply and bring it more in line with demand, which has started to get a little bit out of balance since, let's call it the end of the pandemic, 23, 24. And when you look at inventory levels at or above 3 million units, we're consistently 1 to 1.3 million units of sales, of demand. So as that ratio gets above 2, in the worst, pre-pandemic, it would be close to 4. So as that balance, that supply demand gets out of balance, there goes, from a retailer's perspective, there goes your pricing power, there goes your margin integrity. So what we're saying is one of the implications of this tariff is that it will put supply and demand back in balance, like what we saw during the pandemic. And what's interesting about that is that the record year of profitability for dealers, for retailers, for franchise dealers was 2022. 2022 was a year of 13.8 million new vehicles sold, which is, to put that in context, it was 16 million in 2024. So by all measures, and the record was 17.5 in 2016. So by all measures, a very weak volume year that drove record profitability. So what we're saying is if you follow the evidence of what will happen due to tariffs, and there we're talking about 16 million new vehicles sold in 2024, 11 million of those vehicles were built in the United States. So if we look at it from that perspective, we're saying there's 5 million vehicles in play, right? We're not saying 5 million will or won't get built. It'll somewhere between 0 and 5 million are in play. So when not all of those are built, there's your supply constriction. Demand stays reasonably level, which it has throughout history. You bring supply and demand back into balance. the price and margin leverage now returns to the manufacturers and the dealers, which is exactly what happened in 2022 during the pandemic. So you get your phrase tariff pandemic, because
Okay.
we think that the profit and revenue dynamic will be very similar to what we saw in 21 and 22.
So that's a supply demand equation, which harkens back, as you said, to one of the most profitable year for dealers on record. And what does it do to the other subject that's being thrown around, which is affordability?
Well, that's going to suffer, right? And I think everybody knows that, including the administration. And President Trump has come out and said he could care less if they raise prices. Um, but that's not the goal here. The view isn't of the consumer and creating affordability. The goal is you can have a job building a vehicle in this country, or you can have a cheap vehicle, of which the job goes away. We bring it in from somewhere else, a low cost region. It's essentially saying if you want to sell it here as a manufacturer, please build it here. And if you don't, you'll be penalized. So really the view, and I know this is difficult for people to understand because we are all consumers, is not to benefit the consumer at all, except for that you keep or you expand the job base here and the manufacturing base in the United States, which helps the consumer by being able to earn more. Because really, what it comes down to, do you want an affordable vehicle or do you want a job to buy a vehicle with? But and I think about this, as I'm just futzing around, is that look, everybody wants to make more money every year, no matter what job you have, right? Those are and multiply that by every part of the value chain in building anything, including a vehicle, right? So prices are perpetually going higher, right? And so to be able to afford those vehicles, you need to employ people. Right. So if we move that production outside of the country, the vehicle may be affordable, but it's still always going to be going higher in terms of price. But you're not going to have a job to manufacture it here. So the goal is not to put an affordable car or truck in every driveway. It's to create jobs. And the administration's aware of that trade-off, right? Which is to say, even the vehicles that are built in the US, because if you look at it, nothing, final assembly in the US, nothing is 100% US parts. So even the highest, which I think is the Kia EV6, might be 80%. So 20% of those parts are going to get a tariff on them. So everything has to go higher, but that's not the concern, right? The concern is the jobs on the other end. And what's interesting there, when you think about that, look at the UAW stance on this, right? Behind Harris during the election, completely behind President Trump on the tariff front, saying this is what the country has needed to create jobs in manufacturing here.
There are some who say that, I mean, the long term goals are exactly that. They are long term in this industry. Nothing happens quickly as it relates to manufacturing. So there are others, especially in the dealer community, who say that when affordability is an issue for consumers, then when consumers back away, sales slow, jobs are cut, hours are reduced, bonuses disappear, and demand for used vehicles spike. But when prices go up across the board, it hits families who can't absorb another financial blow. So what happens at the dealer level? Not profitability. I'm talking about supply and demand profitability. I'm talking about the effect that it may have on dealership personnel.
Right. And I think there may be some right sizing at the franchise because it's going to be fewer transactions. To your point, there may be fewer transactions, but the revenue pool and the profit pool is actually much larger, but you're doing fewer transactions. And that will bleed into the parts counter, the service bay, the used vehicle, right? Like, so maybe your enterprise is a little big. It's nowhere near as bad as it is for the manufacturer with underutilized or not utilized capacity, factories that are idle. So what this is trying to do is to say, if you build it here, you can sell it here without a tariff. And when you look at capacity utilization of auto factories in the US, and if you think about 80% as being the target, this country, auto factories has been under 75% for like 30 quarters in a row. So, and in the December quarter, in the fourth quarter of 2024, it was 68%. So we're a long way from utilizing those factories efficiently. This is to say, hey, of those 5 million units in play, ramp up your domestic factories and you can fill some of that demand, right? So it doesn't necessarily mean, I mean, there will be less volume, but again, the revenue pool and the profit pool can actually be bigger. And then you have people doing just different jobs, right? It's not this scale for scale's sake. And when that consumer goes away, and you have to think about it, and I talk about this all the time, is that from a manufacturer's perspective, they don't care, right? Because that affordable vehicle, if it's not profitable, makes you a bad customer. And what those manufacturers are trying to do is to say, we can't we just can't sell things unprofitably. It's just not sustainable. We're going to move up market to where our break even is, get above that. And if you are one of our customers, that would be great. And if you're not, we can't, we're not in this to put a vehicle in every driveway. We're here to make money. So that model is not sustainable either. And there will be somebody to satisfy that market, right? Somebody who either wants to appeal to the entry and move up buyer and do it unprofitably, whether you're subsidized by your government or whether you're willing to take a loss because you think that ownership experience will be good for the consumer and they'll stay with you and they'll move up through your portfolio to the profitable end. But a lot of automakers don't want to take that chance. There's no brand loyalty that's guaranteed. So if I have to sell you 3 or 4 unprofitable vehicles at the bottom of my portfolio to hope that someday I'll make money off of you, it's just not worth the risk. And most manufacturers, especially the domestics, have backed out of that strategy altogether and basically said, if you're 50,000 plus, we have product for you. If you're not, we just don't. You need to go see a competitor.
When you and I talked last year a couple of times on this program, we talked a lot about the movement of the industry in a not so positive direction. Basically, the industry's bad habits had somewhat returned, alluding to several things you've just said here. We didn't talk about this. We frankly didn't see this kind of impact coming. Is this just another great reset for the industry?
Yeah, absolutely. And the shame of it is that it takes a reset, an external one,
right,
to reset it, right? And I was hopeful coming out of the pandemic period that more so manufacturers than dealers. I understand the franchise base. You want transactions. You want people in the showroom. You want to, upsell, right? Like that's the business, right? You want them as service customers, right? That's just how it is. But I was optimistic that the manufacturing base would recognize how stark that profit dynamic was when supply and demand were in balance and then maintain, some of that discipline that was forced upon them because of supply chain disruption. And it really felt like it was slipping away or is slipping away to the point where, when you look at that inventory to sales ratio and if 1-to-1 was where the world was or the country was most profitable, we're now back to a 3-to-1. And I was hopeful that would stay around a 2-to-1 and understand that was the best of times. But the other thing, Jason, when you think about that is that you have to remember what the capacity utilization of your factories is. So it's expensive to run at 68% capacity. So what do? You build. And when you think about your cost structure, if you're not building enough in the first place to cover your break even, the game's over before you even start. Right? So when you think about, well, let's keep supply and demand in balance and we'll be more profitable, you still have people and expenses related to your underutilized factories. So you have this sort of bottom line, we have to produce at this level just to satisfy our fixed cost structure. And then from there, we try and figure it out, right? So now what this does, maybe this next reset, is it sort of knocks some sense into manufacturers that say we have to take out some capacity, right? Or we have to take out some capacity from somewhere else and build it in the United States, because if we want to sell there, that's where we need to build. And so, and again, that's the goal of the administration, is to say just build it here. That's all we're asking, right? And then you have your factories running at that 80%. You're selling what you can do, and now you can be a little bit more rational on your output strategy. But if you have too many factories or too much capacity in those factories, you have to run them. And then you throw money at the problem after the fact. And that's still where the industry is.
Finally, let's revert back to the original statement. If this is a tariff pandemic, and we've all kind of been here before in various ways, we know how to navigate through these things. I'm a dealer listening to this program. And maybe, Kevin, I'm not as in, I don't have feelings of dismay that maybe that are circulating in other venues, as a, whether it's consumer pricing or whatever else. But I'm feeling maybe that this is an opportunity to look at my business again, probably cash in on the supply demand imbalance, and maybe the world isn't ending.
Yeah, no. And that internal conversation with yourself will be very similar to what it was during the pandemic or at the start of the pandemic, right? Now, what I would say is expect fewer transactions, right? This isn't, right? If you think about global financial crisis, right? The world ends, we go to 9 million units in this country. We build back up. By 2016, it's 17.5. Right, the pandemic hits, we're all the way back down, right? In 2022 is 13.8, and we build back up, and we're 16 in 2024. What I'm saying is we're not getting back to that 17.5, at least not organically or financially, healthily by doing that, right? What we're going to do is now this external shock puts us at maybe this 15 and a half, 16 million organically healthy market. So expect that, right? Don't expect that every year this is a 16, then a 16.4, and then a 16.8, and then a 17.2, and then here we go back towards this 18 million goal. So I'd expect fewer transactions. The other thing I would say is that I'd expect more revenue and profit contribution for those transactions. If you need to right size your business to that, then that conversation will be similar to what you did at the beginning of the pandemic. And I think the other, where there may be a little bit of angst too, is that again the administration is not doing this for the consumer, but that's who the dealers face, right? So you have supply constraint, which is going to, and then you have tariffs, which are going to drive prices of everything higher. The manufacturer's saying this is what we have to do. We're not going to offer as many vehicles. Prices are going to go up. And then you have the dealer sitting right between that mindset and the consumer saying, where's affordability gone? It's through the roof. And in a lot of cases, even during the pandemic, from the end of 21 through almost the end of 22, when the consumer had to pay above MSRP, the dealers felt the brunt of that, right? Because they're the ones sitting across the desk from the consumer, who doesn't have as much choice as they used to have. They don't have as much haggle and price leverage as they feel like they used to have. And so that might be, that might cause a little consternation, but ultimately from the business perspective of the retailer, this isn't necessarily a bad thing. I think a lot more of the financial pressure of this tariff scenario falls on the manufacturer. What are you going to build? How much are you going to build? How much are you going to send here? Who's going to eat this tariff? Are you going to pass it along? Where the dealer doesn't have that kind of, or that magnitude of structural decision to make. They'll basically sell what they're given, do what they can with pricing, and try and keep both sides happy, which, as we know, will be impossible, but it's certainly not the financial burden that the manufacturers are facing.
Wonderful. Always great to get your insights. The tariff pandemic is his own catchphrase. We'll give him credit for that, but he is Kevin Tynan, and thanks for being on the program.
Oh, my pleasure, Jason.
That's the 42nd episode of Full Throttle. A special thanks to my guest, Presidio's Director of Research, Kevin Tynan. And thanks for listening. For a library of these episodes with industry leaders, go to thepresidiogroup.com. I'm your host, Jason Stein. We'll talk to you again next time.